Well, I thought I was an expert on tariffs. I've been claiming that for quite some time here on the channel, and I've had Jeff Lutz on here, who is another expert on tariffs, and he last night helped us get some more understanding about what's going on with the tariffs. But I'm sure that both of us must be wrong, or are we not wrong? Because you see, the market has decided that the 25% tariff on automobiles that seemed to be a crisis, a horrific, terrible thing, apparently it turns out to be a nothing burger because markets this morning are down just a tiny little bit. Legacy auto, Ford is barely down at all. General Motors is down like 5%. Tesla is up, even though Elon Musk said that it wasn't, well, what did he say here? The impact is significant. Will have an impact on Tesla in some way. Doesn't give us an exact understanding of that. Apparently, maybe some parts are covered by this. But anyway, all I can say is apparently the 25% tariff is not as big a deal as I thought, and one of the things is I've been kind of surprised why there wasn't a big lineup of CEOs, CFOs, union people, other kinds of folks, over at, lined up in Washington, D.C., the representatives, I mean, why weren't they calling their senators and their congress people and asking for there's no headlines from the CEO of Ford, no headline from the CEOs of General Motors or Stellantis with them saying, "Oh my gosh, this is going to destroy us." So not to say that there won't be any pain, but I'm beginning to think that maybe the big three and even Toyota, Honda, and others who have plants here, the South Koreans, Hyundai, Kia, maybe they think this is actually a good thing in the long run. And maybe stockholders are thinking the same thing because how else can you explain the stock action this morning? How else can you explain the fact that these people have not been making headlines for the last 2 weeks and are not making headlines this morning? I don't see anything from the CEOs of any of the major automakers complaining about the 25% tariff. I see complaints coming in from Europe and from Canada. I haven't even heard from Mexico. Anyway, the thing I'm more concerned about that the bonds are still selling off this morning. They're still going, the yields are still going up. That's the one that needs more explaining. I think it has to do with some national, central banks and sovereign wealth funds. But man, it's just sad because this is the linchpin. This is the thing we need to really make sure things are going to be going great in the future. We did have a lot of economic news this morning. I'll go over that in a minute, and none of it was really impactful in terms of the economy, or you'd see it in the stock market, I guess. But so far, stock market is looking good. Um, according to USA Today, major automakers and tech groups last week called on the Trump administration to take steps to speed up the deployment of self-driving cars, citing a number of regulatory hurdles. This is really weird. The major automakers, not Tesla, it doesn't say Tesla. This is the Alliance for Automotive Innovation, a group representing nearly every single major automaker. In a letter seen by Reuters, called on Transportation Secretary Sean Duffy to quickly implement a national performance-based framework and assert the National Highway Traffic Safety Administration's role as the sole regulator of self-driving vehicle hardware. The Consumer Technology Association, Autonomous Vehicle Industry Association, and other groups also signed the letter. Wow. I mean, it's only Waymo right now that has actually got a significant presence. The Tesla just about to start. It's interesting that all the other automakers are like, no, we need this. I mean, this is significant, and it's not getting reported. I didn't see anybody talk about it on X. This is significant. If all of the automakers are asking the national government to please speed up, that means that all of them recognize it's coming. It's here. All right. And apparently, some of them maybe are planning to buy there are licensed from Tesla? Maybe not. But in any case, they all want this to happen. Says if the federal government fails to act to advance sensible AV policies, we will cede our leadership in this economically crucial sector to China. The letter said multiple agencies and state regulatory regimes create inconsistent rules, risking safety gaps and eroding public trust. You put this together with yesterday's Austin news, or the news with regard to the confirmation of Austin in June. Was that 2 days ago? We're really on the verge of something happening here. The groups want the U.S. Transportation Department to not require human drivers to operate self-driving commercial motor vehicles and allow self-driving trucks to use cab-mounted warning beacons instead of devices requiring drivers to physically deploy them. U.S. Department of Transportation did not immediately comment. NHTSA should clarify that no manually operated driving controls are required in self-driving vehicles and ensure a driver's license is not even required to ride in an AV, obviously. The industry faces scrutiny after a pedestrian was seriously injured. Oh, whatever. NHTSA opened investigations into self-driving vehicles operated by Cruise. Google owned Waymo, false report to influence. Yeah. In December, US DOT proposed streamlining reviews of petitions to deploy self-driving vehicles without human controls, such as steering wheels or brake pedals. Efforts in Congress to make it easier to deploy robotaxis on U.S. roads without human controls have been stymied for years. Tesla CEO Elon Musk, who is leading Trump's effort to shrink the federal government, told investors in January Tesla would roll out autonomous ride-hailing in June. Tuesday's letter is the latest push for more action by regulators. Autonomous vehicle companies in January urged DOT to assert its responsibility over the design, construction, performance of autonomous vehicles and increase its efforts in key areas. Then in December, automakers and the Chamber of Commerce called on U.S. DOT under then President Joe Biden to do more for self-driving vehicle deployment. Politico has this morning. State Senator Pat Fahey, F-A-H-Y, an Albany Democrat who has championed electric vehicles, introduced a bill Wednesday that would yank permits for Tesla's 5 in-person sales locations in New York. Other electric vehicle makers would also be allowed to compete for the permits that Tesla currently has. No matter what we do, we've got to take this away from Elon Musk, Fahey said. He is part of an effort to go backwards. Musk's close association with President Donald Trump as he spearheads an aggressive, fast-moving effort to shrink the federal workforce has become an issue for Tesla in Democratic states. Musk, the world's richest man, funded Trump's re-election campaign and was tasked by the president to lead the Doge. He pushed for Doge employees to gain unprecedented access, et cetera, et cetera. Lawmakers and advocates have been pressuring pension funds to divest from Tesla. We know that. Trump has cheered Musk and purchased a Tesla, as we know last week. Tesla still sells more electric vehicles in the U.S. and New York than any other manufacturer. The company eschews the traditional dealership model of selling cars through third parties. Tesla sells directly to consumers, and in many states, auto franchise laws limit that approach. In New York, Tesla was allowed to continue to sell from 5 locations. The deal in New York also shut out newly electric vehicle makers such as Rivian and Lucid. Fahey, in previous years, championed legislation to fully lift restrictions on direct sales by EV makers. That would have benefited Tesla and other EV makers. Fahey said she wanted to use electric vehicle sales to take off in order to cut emissions in New York and help achieve the state's climate goals. But associating with Musk through the Tesla brand has become politically toxic for Democratic lawmakers. Existential threats, the fact that the world could die from CO2 is de minimis. It makes no difference compared to the fact that you're on the political other side from Elon Musk. The Musk factor played a role in declining support for a bill to allow direct sales in Connecticut. A measure to end Tesla's ability to sell to consumers was introduced in Washington state, along with one to allow other EV manufacturers to set up shop, but neither is expected to move forward later this year. Fahey's proposal would still cap the number of direct sales locations for EV manufacturers at 5, but would prohibit Tesla from continuing to operate after July 2026. Assembly member Bobby Carroll in New York City Department plans to propose ending direct sales altogether. He said he wants to close the Tesla loophole. We should have never done this for Elon Musk in the first place, Carroll said. He said he supports the franchise model because it prevents billionaires from gaining more wealth and power. What a joke. It allows for small business people to be actors in this market. They're not perfect, but they're clearly significantly better than the alternative. If we allowed the expansions of direct sales, what would happen to 2 or 3 people who would control so much? Faye said she'll work with Carol because they want to get rid of Trump and by extension, Musk's advantage in the state. The bottom is Tesla has lost their right to promote these when they're part of the administration that wants to take us backwards. Elon Musk was handed a privilege here. So in other words, in the United States, we're going to follow Canada's lead here, and we are going to attack specific people and specific companies and our legislation. This would be the end of America as we know it. This would be, if you want to talk about the end of democracy, if the federal government or state governments begin to pass laws, pass rules, make decisions based on the political positions of their enemies, their political enemies. That's all they are, political enemies. If that begins to happen in the United States, and that is legal, which is not, there's no way it's constitutional. It's not closely resembling anything that would be constitutional. If that happens, it would be that would truly be the beginnings of the end of democracy. Fox News has this. It was not too long ago that a part of the left's climate change push. Owning an electric vehicle was the pinnacle of virtue. To save the planet, there were EV mandates, EV tax credits, and even targets for companies switching their manufacturing to EVs. Tesla was the darling of the green movement. As the US's largest manufacturer of electric vehicle, owning a Tesla was a way to show you were on the right team. But not anymore. Tesla's head honcho Elon Musk has gone from leftist darling to persona non grata in an instant. And Musk has become entrenched with the current administration, helping President Donald Trump with such horrible activities as identifying waste, fraud, and abuse. Musk's social credit score has gone down. This has happened despite his work on fraud and abuse, being the very same issues that many on the left have come out against for years. We've seen the videos, if you haven't seen them on X, of Clinton, of Obama, of Hillary Clinton. I mean, these are videos showing them saying we need to get rid of fraud, waste, and abuse. So the same virtue signaling scolds who screamed that you were killing the planet if you did not buy an electric vehicle are now targeting owners of those very same vehicles, going after the people they once praised for making a supposedly morally and societally superior choice. Across the U.S., news stories keep propping up of Tesla drivers being harassed and having their cars scratched or keyed just for owning a Tesla. This doesn't directly impact Elon. His company doesn't own the cars that are purchased. In fact, many of those people are probably Democrats. It only damages the property of someone who was, as the left would say, doing the right thing to save the planet. But it does create the threat that if you are on the right team, you'll be harassed too, which can make people think twice about buying a new Tesla or keeping their existing one. I guess, according to this writer for Fox, I guess the planet comes second to whatever the new virtue signal is today. And today that is Elon Musk, who's not on the correct team. Worse, recent violent attacks against Tesla have included setting Tesla cars ablaze, etc. We know this. This exposes the climate scam for what it was. It was never about the planet. It was always about power and control. Further pulling back the curtain is former Vice President candidate Tim Walz, who also is rooting against America's largest EV producer, a company that is a clear leader in saving the planet on so many levels. In a speaking engagement, we know that about Walz. Okay, but Tesla is more than just a green company. It's also one of the largest stocks in the world market capitalization, in the top 10, is widely held and substantially component of major stock indices, meaning it's probably in your pension plan and their pension plan too. Rooting against Tesla is rooting against American jobs, American 401ks, American pension plans. In fact, Fox News reported that Tim Walz's home state of Minnesota state employees pension owns 1 million Tesla shares. But Walz and the left don't care about the environment. They don't care if you fail. They just want you to fall into line. That's what they want. They want us to fall into line. You can never win with the virtue signalers because they have no actual moral compass. They just bend to whatever they believe will preserve their perceived societal status. And now, hardworking Americans who have been aligned with the green agenda are being bullied, terrorized, intentionally terrorized with not one significant leader in the Democratic Party coming out against the terror. In fact, several of them have been asked to do so, have been approached by reporters and said, hey, are you against the terror or not? And they turn away and they won't even do it under that kind of pressure. Many of us knew the climate directives were always about power and control, and now that's what's been exposed. Okay, on a completely different subject, this is from investing.com this morning. HSBC has slashed its price target for Tesla to 130 from a previous target of 165, driven by weak fundamentals and increasing competition. I will bookmark this. We will never see 165 again. We will never see 130. In fact, I think at this point, 225 is probably the floor if things really went badly. I don't think any of those are going to happen, especially as we get closer to June. The new target implies a downside risk of 50%. The analysts maintain a reduced rating, meaning reduce your share covers, how much you care. Reduce how much you own. Tesla's fundamentals have been under pressure for some time, HSBC pointed out. The company's strategy for cutting list prices, particularly in December 22, alienated European fleet buyers. Furthermore, aging models. There's no more aging models. All of them are as current as they can be. And limited driving assistance features. Okay. Wow, this is really bad. The refreshed Model 3 launched in quarter 4 2023 provided only temporary sales boost. And while the new Model Y may offer some relief, it is after they just said that the models were aging. They now talk about both of these new ones. Tesla issues many of the industry's norms, holding list prices firm, making regular. What company in the automotive industry holds list prices firm with regular facelifts, model renewals, and has, oh my goodness. I'm going to stop. Quarter 1, 2025 expect to be particularly weak. Yes, due to the changeover. Look at this. They got it right. Due to the changeover of the new Model Y, which resulted in several weeks of lost production in the new quarter, impacting margins due to idle capacity and other ramp-related costs. Yeah. HSBC estimates quarter 1 volumes will be around 385. That is below the consensus, potentially as low as 343, assuming no boost from the new Model Y. Well, I think that 343 is too high, and the other one might be too. I mean, the what do they say? 385 might be high, but the 343 is probably low. We suspect the messaging of quarter 1 will be that the issues are temporary and the future remains bright. We doubt brand issues will be discussed, analysts wrote in the note, because it's been proven over and over and over again that the brand issue is a nothing burger, as the conservatives are starting to buy the vehicles, even as the virtue signaling left is not. The report also raised questions about Tesla's long-term promises, particularly regarding autonomous driving. The automaker has long promised autonomous, blah, blah. HSBC expects Tesla's earnings to remain under pressure due to slowing growth and aggressive pricing. Potential upside could come from the launch of new BEV models and increased market enthusiasm for Tesla's AI and related products. All true. This is from Andy Ostroy, Andy Ostroy. CNBC reports that one auto executive just told them that Trump's new tariffs will send the auto industry into recession, raise the cost of cars, and cause a drop in incentives and deals. Well done, Mr. President. Except, as I said in the beginning, auto stocks are only down 5 to 10%. This does not suggest Armageddon or anything close. And I'm going to try to look surprised. Okay, this is Randy Kirk. Please hit like, subscribe, notify. Yes, this is long. I know we have lots more to go. Please hang in there if you want to be up to date on what's happening in the economy. In the week just ended March 22nd. By the way, do you know that you can now become a member? Yes. If you don't like Patreon, it's so simple to become a member of my YouTube channel. It's right there somewhere on your screen. You can just click it. In the week ending March 22nd, the advanced figure for seasonally adjusted initial claims, 224. It's like, okay, that was a decrease of 1,000 from the previous week. The previous week's level was revised up by 2,000. The 4-week moving average was 224,000. So anyway, yeah, it's really nothing happening there. Total number of continued weeks claimed for benefits was actually down, which would indicate people are having an slightly easier chance. It wasn't down that much, 30,000 from the previous week, out of 2 million. So slightly easier to get a job right now. Market Watch, the U.S. grew a revised 2.4%. And that's instead of 2.3%. Now, remember, this is a quarterly report. In January, you get the first look. In February, they check the details and they come up with another report. And then in March, they come out with their final report. Well, it's been 2.3 the last two times. Now they're saying, well, you know what? Turns out it was 2.4. This was the fourth quarter that we're talking about. So while this is not terribly impactful on today, it's just interesting to see where we really were according to the stats. The annualized increase in gross domestic product was raised. Current estimates for the economy, however, show a much slower pace of growth in the first few months of next year, perhaps at 1.5% or less. A sharp cold snap, a holiday spending hangover, and uncertainty tied to trade wars has weighed on the economy. I think, the most notable change in the fourth quarter report, meanwhile, was a somewhat less robust pace of consumer spending. So I think and gross domestic income, which is the flip side of GDP, increased at a 4.5% rate. And this is normally should be a lot closer. This is being this much higher than the GDP is actually interesting and needs to be further explained, but I couldn't find anybody with a further explanation. Also, the GDP increase on the the GDP in the first quarter will be dramatically impacted by the massive imports that are taking place right now. Forex Live had this just before we came on today. U.S. February advanced goods trade balance negative 147.39 billion versus 155 billion, negative 155 billion expected. This is not a surprise at all. This is totally expected, but it is, huge. These are people that are front running the tariffs. The chart is somewhat important context. The small bounce following a huge decline. Last February was only 92 billion. The deficit was only 92 billion. So the whole story here is surging imports, been a jump in industrial supplies and consumer goods. And there's also a big impact of gold. And I think tonight with Bradford Ferguson, we're going to be talking about this gold situation. The U.S. is importing a massive amount of gold. Okay, I know we're going long. I'm very sorry, but there's a lot, okay? And we need to look right now at where the markets are based on all of this. Well, Tesla is now up 4.31% at 283.78. The Dow Jones has turned positive in this tariff environment, 0.09 up. NASDAQ up 0.13, S&P up 0.15. Magnificent Seven mostly up, even NVIDIA. Only Google is down, and that's slightly. I'm going to take one more second. I know, even though we're way behind here, I'm still going to look. What is Ford? Ford is down 4.13 at this point, but that's still not very much. And GM is down 8% this morning. So that's fairly significant. But again, and it was down yesterday. If we look at both days, if we look at 1 week rather, it is only down 4.84 for the week. All right, this is not like the end of the world, folks. All right, let's go ahead and look at the bonds. As I mentioned, bonds continue, the yields continue to go up 3.3 basis points. We're now back up to 4.371. I think we're going to be, okay, this is one of those times. This is not investment advice. Bonds are a buy right now. I'm sorry. This is lifetime advice. I don't play bonds, but if I played bonds, I would be buying bonds right now. There's no way it's going higher. This is it. We're done. It's going down from here. All right. Book market, do it. No, 2-month is down. I call it flat, 4.3, and the 2-year is also down a little, 0.8 of a basis point. Yeah, really, really not good. Okay, let's go on to oil. Oil is up a tad, still saying Texas Intermediate is staying under 70, but barely at 69.67. Of course, I believe it's going to be headed lower. Interesting, still about $44 between the two. And then natural gas down 0.54 this morning at $3.84. Gold futures up 35. This might be an all-time high, 3,057. I'm not going to look it up now because we're so far behind. And then silver up also 34.71. That would be a recent all-time high if you don't count the asterisk from the attempt to control the silver market several years ago. Copper down 2.94%, still over $5. That's a pretty significant drawdown, though, as it's been at all-time highs now for a week. Bitcoin up 335 at 86.7, and there you go. That's all there is to tell you this morning, except, as always, I'll tell you where we are on Tesla in a second here. Still going up, it looks like, up and to the right quite strongly. So later on today, you've got Bradford Ferguson. That would be at around 5 o'clock, probably like 5:15 usually. And then tonight, Cern Basher at 7:45. The Brian White, second part of Brian White, which is an outstanding piece of work, but not as news immediate. I'm holding that off. That'll be Friday night, and is when we'll do the Brian White video. Like, subscribe, all that stuff. Hit the membership thing if you'd like to support the channel, or Patreon, still fine. I'll certainly accept either one. Tesla is going up very strongly at this point. It's up $5.15% at 286, continuing pretty much a vertical rise. Maybe people are finally getting what I've been talking about for 3 days now. Okay, this is Randy Kirk. Got to get out of here. It has been great talking to you.